The biggest bank in America has the okay now from Uncle Sam to pay back shareholders. JP Morgan will be allowed to restart a stock buyback plan early next year. Like all systemically important banks, JP Morgan has to get regulatory approval to change its dividend or stock repurchase plans. Now, regulators want banks to have enough financial firepower to withstand troubled times before the banks will spend money on shareholders. JP Morgan's buyback strategy was suspended this year after it lost $6 billion when a derivative trading strategy backfired. The bank will resume buying back stock in the first quarter. It has $1.4 billion of its $3 billion goal still left. Now, the bank also said it has an agreement in principle to settle an investigation into how mortgage securities were sold to investors by its Bear Stearns unit. Kenneth Thomas is with us tonight, an independent banking analyst here at NBR. Ken, first of all, JP Morgan has just over 10% of its firepower. That's that buffer, the capital buffer that regulators look for. Is that enough?
Yes, it certainly is. In the case of JP Morgan, they are the bank right now, and Jamie Dimon is the banker. He's the go-to guy. They're our biggest bank and really our strongest bank in many respects.
Capital requirements is what that's referred to, that 10% buffer. And that's just one area of regulation that regulators have focused on since the mortgage and the housing bust and the banking collapse. With President Obama being reelected and status quo in terms of the balance of power on Capitol Hill, what can we expect in terms of banking regulations going forward?
Clearly more regulations. Banks are going to have to be stronger. They're going to have to come up with these plans, what happens if they get into trouble, but much more regulation across the board.
What's it mean for shareholders?
Shareholders are going to have some issues with financial stocks, clearly because these additional compliance costs are going to mean greater cost overall to the bank and not as much profit. So the stronger banks will get into different areas, but so many of the weaker banks will have to be merged out.
Another big voice for banking regulations will now be in the United States Senate. This is Elizabeth Warren. She was elected as a Democrat from Massachusetts for the U.S. Senate on Election Day. She's got quite the resume as chair of the TARP Oversight Committee, and she's a special advisor, was a special advisor to the Consumer Financial Protection Board. What does she bring to bear when it comes to financial regulation?
Well, besides Obama, she was the #2 target on the bank's list. They did not want either of them. With both of them back, clearly with Warren there, especially if she gets on the Senate banking panel, this will mean much heavier regulation, and she will be there to protect the new Consumer Bureau that the banks have attacked so much.
Let's talk about this from a consumer standpoint, though, because we have seen banks try to raise some consumer fees, trying to raise banking fees as they try to make up for the lost profit that they're seeing on the regulatory side. Will it mean a safer banking industry?
Well, absolutely. Safer, more responsive, and protection. This is what it's about, protecting the consumer, and we've already seen their actions. The banks are very concerned about it. They've done everything to weaken it, but she will be there to make sure it stays there, and she will have its back.
What types of banks particularly do you see being able to operate in this environment?
Really large banks, because with all the costs of compliance, you have to get to a certain economy of scale. We have 7,000 banks. Many of these banks will not be around in 2 or 3 years.
Because of failure or because they'll be bought out?
Well, because of not being able to have the economies of scale to manage these compliance costs. You just have to have too many people, and only a bank of a certain size, say 500 million, at least $1 billion, and there's so many of our banks are under that size.
Yep.
Economies of scale.
That's a big size bank there. We've got it with independent banking analyst tonight, Kenneth Thomas.